Hello and welcome back to lesson number 3 of Basics of Stock Market. And today we are going to light some candles. Not really, but we are going to throw some light on the candles. See, whenever we imagine the stock market or we see the stock market, we see price going up and down. By the way, if you don't know how the price goes up and down, there's a video right here. Now, whenever we see the price going up and down, we see it in a graphical form, something like this. Every minute, every second, price goes up and down. And we are surely going to learn today. So without further ado, let's get started. Before we learn about what is a candlestick chart, let's learn about what exactly is price action. See, whenever we see the prices going up and down, it is always plotted on a graph over time. So the y-axis is the price and the x-axis is time. And that is the basis of the technical analysis done by any trader or investor for that matter. And now comes the real thing. What are charts? What is exactly candlestick charts? How can you read it? Let me show you directly on the screen.
So for starters, you need to have a platform which provides charting facility like this. Most brokers provide it by default, but I personally use Upstocks because I think this is the industry best. Its charting facility is very advanced compared to all other competitors. And if you do not have an Upstocks account, make sure you open up right now. It is in the description. Sign up. It's easy. So let's see the legendary candlestick chart. Right now we are looking at Reliance, and this is the daily chart of Reliance, daily candlestick chart. I'll tell you what daily means here, but let's first understand how a candlestick chart is plotted. As I told you earlier, this is on the y-axis is the price, and on the x-axis is the time. It is always plotted over time. And this little d here shows the daily time frame. That means this chart is plotted on a daily basis. This is one day, this is one day, another day, and these are all days. Now we can also select the time frame according to us, according to our analysis, what we want to do. It starts right from 1 minute to all the way to 1 month. If I change it to 5 minutes, see the chart changes. So this is 5 minutes. This is 3 p.m. This is 3:05. This is 3:10, 3:15, like that. So before understanding how a candlestick chart is formed, let's understand how a candle is formed first. So let's take an example of this candle. We can see this is a green candle. There are other candles as well in between which are of red color. We'll understand why the color is different as well. But for now, let's focus on this candle. If you see this candle, from this point to this point is the body of the candle. The body. And these on the both sides are the wicks of the candle. Apologize for my writing. So this body and wick combined forms a candle. Now we need to understand another important thing, which is called the concept of OHLC. This simply means open, high, low, and close. Let's apply this OHLC to this candle. Now suppose this candle opened up here at this point. So this is open, then comes high. This is the high of a candle. Then comes the low. This is low, and close. This is close. So this is how we determine the open, high, low, close. This simply means that this Reliance stock on a particular day, on this day, opened at this price. It went till the low of this price. It went up to the high of this price, and finally at the end of the day, because this is a daily chart, closed somewhere at this price. And since this is the close and this is the open, if the close is greater than the open, that means the price ended up higher on a particular day. I repeat, ended up higher on a particular day. That means it increased on a particular day. This becomes a positive day, and that's why the color is green. Now let's analyze another candle, which is a red candle. Now, since this is a red candle, that means it closed lower on a particular day. So this becomes the open, this becomes the high, of course. This is the low of the candle, and this is where it closed. As you can see, the open is greater than the close. That means the price went down on a particular day, and that's why this is a red candle. All this candle formation happens in different time frames, as I told you earlier, and this is how a candlestick chart are formed. Now there are a lot of things you can do on these charts, like you can apply some indicators, which are basically mathematical formulas plotted over a chart. But definitely we are not going to learn it today. We are going to learn it slowly, gradually, over a period of time, so that our understanding of the charts, of the patterns are better. So right now, if I want to leave you today with something, I would leave you with the thoughts of candles. Wherever you go, make sure you see candles. And then your life will be completely changed if you're a trader or an investor or you want to become one.
I hope you like this video. If you do, hit a thumbs up. Make sure you subscribe to the channel because we are going to get deep into the stock market. We are going to learn a lot of things. Stay tuned.